morning, everybody. Thank you for joining our webinar today. Our webinar is going to be focused on high-value goods dealers and their FIC Act obligations. I hope everybody is nice and warm this morning because I'm saying it's a little bit on the chilly side. But if you have any questions, please don't hesitate to put them in the Q&A section or in the chat box. And if you can please complete the attendance register, the link for which will be posted soon. If you could complete that for us, it would be greatly appreciated as we use that information for our own data purposes. Of course, we don't share that with any other people, anything like that. It's just for audit purposes that we keep that information. Okay, so we are going to dive right in. Actually, before I continue, I am joined today by my senior colleague, Sibusiso Dlamini. He will be focusing on the meat and bones of the presentation. I'm just going to be running through the starting part, just the beginning part of the presentation. Okay, so here we go. Okay, so high-value goods dealers. This is due to the amendments to the FIC Act, which became effective from the 19th of December. High-value goods dealers, as well as several other new institutions, were added as accountable institutions. So we expected high-value goods dealers and other institutions to be registered by the 20th of March 2023. But of course, if you weren't certain if you should register or not, please contact us as soon as possible, and we recommend that you register as soon as you can. Okay, so Schedule 2, there was a cleanup of the supervisory bodies, as there were several different supervisory bodies covering different industries, and this has now been simplified to several fewer supervisory bodies. And in Schedule 3, motor vehicle dealers and Krugerrand dealers were no longer considered to be reporting institutions and are now accountable institutions under Item 20 of Schedule 1, of course, being high-value goods dealers. So motor vehicle dealers and Krugerrand dealers have been added to your category or item of Schedule 1. Okay, so the Amendment Act was effective from the 31st of December 2022, and the FIC, of course, we are the FIC, so the FIC is being broadcast by ourselves. So we are responsible for the anti-money laundering, counter-financing of terrorism, and proliferation financing regulation and supervision of all designated non-financial businesses and professions. Okay, so a high-value goods dealer is a person who deals in the business of high-value goods in respect of any transaction where such a business receives payment in any form to the value of 100,000 Rand or more, whether the payment is made in a single operation or in more than operation that appears to be linked, where high-value goods means any item that is valued in that business at 100,000 Rand or more. So the FIC Act obligations that apply to FIC Act obligations that apply to accountable institutions are ring-fenced to scenarios where the full definition of a high-value goods dealer is met, where any high-value good is below the threshold of 100,000 Rand, such a transaction or business relationship will not attract the full obligations as applicable to the accountable institution of the high-value goods dealer. However, the reporting of suspicious and unusual transactions in terms of Section 29 of the FIC Act remains a mandatory obligation, regardless of whether a transaction or business relationship meets the definitions of a high-value goods dealer. And furthermore, the legal obligation in terms of Section 26B of the FIC Act, which relates to the targeted financial sanctions, remains an obligation regardless of whether a transaction or business relationship meets the definition of a high-value goods dealer. So just to simplify that, because that was quite a lot of information. So the high-value goods dealer, the full obligations with regards to the accountable institution would kick in or be implemented when the threshold amount is 100,000 Rand. But for suspicious and unusual transactions, in terms of Section 29, this is a mandatory obligation, regardless of the threshold amount, as Section 29 applies to all businesses and all employees. And the screening for targeted financial sanctions should be applied for all customers at the onboarding stage with regards to customer due diligence. Okay, so this is the new supervisory model that was implemented due to the amendment to the FIC Act. So as you can see on the left-hand side, this applies to all the accountable institutions in the industry, so such as banks and mutual banks, long-term insurance, dealers in foreign exchange. Of course, you can read the rest of those. So that is regulated by the South African Reserve Bank and the Prudential Authority and the Financial Surveillance Department of the South African Reserve Bank, colloquially referred to as FinServ, and of course the National Payment System. And authorized users of exchange, collective investment scheme managers, and financial service providers. These are regulated by the Financial Sector Conduct Authority. So most of these mentioned here, they are financial institutions and what we refer to as designated non-financial businesses and professions. These are regulated by the Financial Intelligence Center. So that would be trust company service providers, the post-bank high-value goods dealers, legal practitioners, property practitioners, gambling institutions, and crypto asset service providers and credit providers. So, of course, as you can see there, high-value goods dealers, that is one of the institutions listed under DNFPBs. So that is regulated by ourselves, the Financial Intelligence Center. Okay, perfect. So I will now hand over to my colleague, Sibusiso Dlamini. Thank you. Take it away, Sbu.
Thank you very much, Mr. Campbell Atkins. Welcome, colleagues, and then thank you for joining us for this session. And then, colleagues, we are in this process together, colleagues. I know that some of us have been in this environment for a long of time, and then others in us, colleagues, are just new, or they started actually being part of the high-value goods dealer framework in after 19th of December 2020, and then with all the other changes that are affected by legislation. So what we're going to look at, colleagues, is the requirements that an accountable institutions need to meet as soon as they register with the FIC. And then now, colleagues, remember that there was a talk of General Law Amendment Act, there was a talk of the FIC Act being amended, as my colleague Michael mentioned a bit earlier, that for the FIC Act, the amendment or the responsibility actually took effect on the 19th of December 2022, and the General Law Amendment Act, the amendment took place on the 31st of December 2022. So all people who have items or goods in their businesses being the keyword, they need to register with the FIC, and then they need to fulfill the obligations of the FIC. So if you are an entity and you are a business, and then you have goods in your business that are worth more than 100,000 rands per item, and then you have to register with the FIC. Apart from registration with the FIC, the second thing that you need to do, you need to report according to what is required by the Act, but we'll cover reporting in detail on the following slides. And you need to apply governance in your environment. Governance, we mean that you need to apply a risk-based approach when you're entering into your entity. And then we look at the risk-based approach, and then the risk management and compliance program, which is a tool or a structure that your business needs to take. Apart from risk-based approach and risk management and compliance program, you also need to train your staff to be aware of what risk your entity is exposed to, and then how do you counter those risks, or how do you mitigate the risk that you are exposed to. And you also need to keep records of all the transactions that you enter into. Records. So I was with some of the colleagues last week, and then we mentioned to those who are new in this space that you keep those records for 5 years after the transaction has concluded. So these applications are referred to as the 7 pillars of compliance, and then they are covered under Chapter 3 of the FIC Act, and then that's where you get more details. Apart from Chapter 3 of the FIC Act, you can also go to the FIC website and look at the public compliance communications, guidance notes, and other publications that will guide you on how to interpret these specific sections a bit better. Okay, colleagues. Now, the first thing that you do after registration, you need to apply a risk-based approach, colleague. You need to look at your entity. What risk does your entity face? And then it could be the client risk if you're dealing with maybe high-risk clients after conducting an analysis. You need to know what are targeted financial sanctions and reporting of targeted financial sanctions. That is actually a state that you cannot deal with anyone who is defined as a terrorist or a terrorist organization, or someone who appears on a list that is published by the United Nations Security Council, detailing that now these people are people that are terrorists or are affected or they engage in terrorist activities, and you can't deal or do business with such people. You are allowed to deal with politically exposed people, a person, but you need to analyze the risk that they pose into your business. You need to analyze the type of a politically exposed person that you're dealing with, whether it's a domestic, prominent institutional person, or an external, or someone out of the country who is politically exposed. And then you need to monitor the transactions and the accounts that you are dealing with. So if you have transactions in your business and then you're engaging with a person who's selling, let's say, weapons that are used to maybe, or items or chemicals that are used to build chemical weapons, you need to understand what type of business that person is engaged to and what type of countries or clients is that person selling that material to. And this should be done in an ongoing basis. Once you conduct maybe during onboarding, once you conduct that analysis and then you know what type of person you're dealing with, you must do that continuously. You must conduct continuous due diligence on your clients, type of transactions that you're entering into, and type of businesses that you are entering into. Should there be any form of movement in the form of transactions, geographic area, or anything that might be linked or related to risk, you must be aware of it and adjust the risk that your organization is exposed to that level so that you'll be able to mitigate and counter any risk that you are exposed to. And then who owns compliance in an organization? This is the duty of the highest body in the organization. Highest management is the body that is responsible for compliance, as much as the operation of compliance will be given to less junior staff, but the highest level of authority is responsible for compliance in the organization. So now, colleagues, what's very important that I know that some of our colleagues have not yet registered to be a part of accountable institutions that report to the FIC. We were given until the 20th of March, 2023 to register. And if you're not registered and then you are a high value goods dealer, by the 20th of March 2023, you are not compliant. And then not being compliant with any law, there'll be always repercussions for the non-compliance. So colleagues, I'm urging anyone else who's sitting in this webinar at the moment, who has not yet registered to be an accountable institution, and that person sells or offers goods that are of the value of above 100,000 rands, that person must register and follow these obligations that we just discussed of the FIC Act. Okay, now colleagues, we're going to look at the risk-based approach. So for you as an accountable institution, the first thing that you need to do, you need to look at your business, identify whatever risk that your business is faced with, assess the risk that your business is faced with. Once you assess it, you put it down in writing, and then you say that these are the risks that I've seen in my organization, and then this is how I'm going to monitor them, and then this is how I'm going to look, maybe on a quarterly basis, biannually or annually, on this risk, and then I'm going to mitigate and put measures in place to make sure that these risks do not cause harm to my business, they do not cause harm to the country as a whole, and then this is how I'm going to manage that specific risk. So, as I mentioned a bit earlier, colleagues, that the risk that the provision of goods and services by a accountable institution, once you are registered, may involve or facilitate money laundering. That's repeating of dirty money, or putting money that might be used for proliferation financing or terrorist financing. So accountable institutions must follow a risk-based approach when managing risks related to money laundering and terrorist financing, including proliferation financing. So when you're applying the risk-based approach, you need to ensure that you as an accountable institution can implement measures that are proportionate with identified money laundering, terrorist financing, or proliferation risk. We are not saying that, no, if you identify that one of your clients is high risk, you are not supposed to do business with that specific client. You are allowed to do do business with that high-risk client, but put measures in place in your risk management compliance program to mitigate the risk that you have identified. The other topic that we are going to look at, colleagues, is targeted financial sanctions. We mentioned a bit earlier that, no, you cannot do business with anyone who's on the list that's published by the United Nations Security Council. So you as an accountable institution, you must scrutinize the client information against the targeted financial sanctions list that is published in terms of Section 26A of the FIC Act and Section 25 of the Product Tara. Product Tara is Protection of Constitutional Democracy Against Terrorist and Related Activities Act. So you as an accountable institution may not establish a business relationship with, or conduct any single transaction or any form of business engagement on behalf of a sanctioned person or with the sanctioned person. So a sanctioned person is someone who appears on that United Nations Security Council's list that we mentioned a bit earlier. And then customer due diligence. This, colleagues, means that you cannot do business with anyone who is not known. You must know your clients, colleagues. You can't say that, no, you met over the internet, someone will be in Chile or someone will be in Bolivia, and then that's how we are conducting business. You must do due diligence on the clients that you're dealing with. So you should not have any client that is anonymous or is unknown. So you as an accountable institution, you must make sure, as required by Section 20A, that you obtain records of the client that is required or the client information that is required for you to conduct business. If it happens that you and the client, you are only going to conduct a single transaction is where an amount that you are entering into business with, or the amount that the client is going to pay you is more than 5,000 rands. So this is stipulated under money laundering terrorist financing regulation 1A. So this is when once of a transaction is paid and the amount is more than 5,000 rands. So this one, you just do basic customer due diligence. It's not enhanced due diligence that is required of you. So you need to identify and verify the person that you're entering the business into a business relationship with. And then you must also identify all the prospective clients that you might enter into business with. So you must know, even prior or before you enter into any business relationship, why maybe you're prospecting and then you are entering into a business negotiation. You need to identify all persons authorized to act on behalf of that person, or verify the identities of such person. This should be in line with accountable institutions' risk management and compliance program, as we mentioned a bit earlier. So transaction monitoring, colleagues. This is when an accountable institution must monitor transactions that you are dealing with. You know what type of business you are engaged with. You know what type of business that your clients are engaged with. So if there should be any anomaly and something that's out of line, is not in the course of business, or it doesn't resonate with the type of business that you are engaged in, you need to be aware of it. You need to monitor that obligation. If you have to report any form of suspicion to relevant authorities, you must do so without delay. This is done by establishing the source of funds so that you ensure that this is consistent with the client's business and the risk profile that you gave or bestowed to the client. You also need to establish a background and purpose of all complex transactions, because sometimes complex transactions are used for money laundering purposes. It could be, people might be layering the money that they want to in, and then that money appears to be dirty, or they want to integrate that money back into the financial systems of South Africa or of any rigid or solid financial system. So you need to understand the flow of funds. Do they make sense? Is someone trying to hide anything with these specific transactions? Should there be any doubt about the veracity of the type of transaction or business that you're engaged with? You as an accountable institution, you need to adequately get more information or request, probe more, ask more questions so that you get more information about the transaction or about the funds that you are not having clarity on. So repeat this process of identification and verification until you get satisfaction and proper answers on the type of transactions that you are entering into. So the forms of reporting that accountable institutions must actually give to the FIC. So there's a section 28 reporting. There's a cash payment. Cash means paper money, traveler's checks, or coins. So that's cash. It doesn't mean that if there's a transaction that is a EFT, which should be reported to the FIC as cash. You, as a high value good dealer, if you receive any transaction that's above 100,000 rands in cash, you need to report that amount to the FIC. And then sometimes it'll be a gray line because people will pay 50,000 rands, and then the requirement of the FIC is that if any transaction is above 49,000 rands, 999 cents, it needs to be reported. Once you register as a high value goods and you receive a high value goods accountable institution and you receive an amount of 50,000 rands in cash, because you're registered as an accountable institution, you need to report that as required by Section 28 of the FIC as the cash threshold that you received. So any cash that is above the value of 50,000 rands should be reported to the FIC. But in addition, it doesn't mean that automatically when someone pays 100,000 rands via EFT, we have to report to the FIC. No. 100,000 rands is only for restoration purposes. It's the requirement that when you have goods in your business that are above 100,000 rands, you are required to register with the FIC. It doesn't mean that everything that you sell that's more than 100,000 rands should be reported to the FIC. The only obligation to report kicks in when the amount is above 50,000 rands and that amount is in cash. That's when you report. Or you have to report according to Section 28A for terrorist property reports. So that's anything that is linked to terrorism. If maybe you own or the client that you are dealing with owns property and then the client is linked to terrorism, you must report such a transaction. And then Section 29. Section 29 is suspicious transaction reporting. So suspicious transaction reporting is only when there's a suspicion that the transaction or the amount that you're dealing with is related to money laundering, terrorist financing, or proliferation financing. That's when you will submit a suspicious transaction report to the FIC. If you see that no, some of these dots do not add, and then there's an obligation to you or from you as an application as an accountable institution to report. But Section 29 is not only limited to accountable institutions. When you read Section 29, it states that any business, person, or accountable institution can report suspicious transaction. So that does not limit the reporting to the FIC to the people who are registered with the FIC. Any business, that's someone who's engaged in business activity. Any person refers to a natural or illegal person. It could be any individual in South Africa. They can report such a transaction as stipulated under Section 29 of the FIC Act. Section 31, IFTR. That's a transfer of funds between cross-border transactions, cross-border money movement. So for all the businesses that engage in cross-border transactions, those transactions need to be reported to the FIC under the IFTR, International Funds Transfer. So that's what reporting entails, colleagues. I hope that maybe we have shed some light. But if you have questions, colleagues, you can, at the end of the session, you can raise your hand and then we'll address those questions, or you can type them on the comment section and then we'll go through them as and when we are going through the discussions. But some of them, if it's possible, we'll be able to respond by typing back to the person who asked the question on our chat box. Record keeping, colleagues, I mentioned this a bit earlier, that accountable institutions must keep records of clients' information and transactions and information. And then they must also keep records of the business relationships. Once you submit reports to the FIC, also keep the records of those reports that you submitted to the FIC. These records must be kept for 5 years from the date of termination of the relationship or the conclusion of a transaction and or submission of a report. So now, if I submit a report today, and then I have this report in my domain as an accountable institution, I need to keep the information about this report from today until 5 days after that transaction that I was reporting on has been concluded. So if you have continuous transactions, colleagues, with your clients or your customers, you must keep that information consecutively until the last day that you're not dealing with that individual or with the client. That's when you are not required by the FIC to keep the information anymore. And then you are allowed actually to make use of third parties to store this information. But the responsibility does not move from you to the third party if you have appointed a third party to keep this information on your behalf. The obligation that is put on you by the FIC Act stays with you as an accountable institution. And then these records must be accessible and then must be kept in a safe place. That simply means that if should there be any authority that will come requesting for this information, you should be able to produce this information and then give this information to that relevant authority. So now, colleagues, we're still looking at the risk-based approach that we apply as accountable institutions, and the supervisor and the FIC as a supervisor that we need to look at. So high-value goods dealers must conduct a risk assessment of their business to identify and assess the particular money laundering, terrorist financing, and proliferation financing risks that they may face. So the factors that they need to consider is the nature of clients. Are the clients individuals? Are they institutions? Are they local? Or are they foreign? Is the exposure from high-ranking people who are influential in your business? And then how do you mitigate and manage that specific risk that those clients are posing? What type of products and services are you offering? Rental or purchasing of a property? What risk is related to rental or purchasing of a property? Nature and value of the property or assets or goods that you are having. The purpose of the transaction. If someone is buying a diamond ring, it could be a diamond ring so that someone has identified the person that they want to spend the rest of their time with. And then that's the reason why they're buying maybe a piece of diamond to be carved and put in a diamond so that the person will be able to get engaged to the next person. The use of property, if it's a property that you're dealing with, what is it used for? What are the benefits? Is it rental? Is it what goods or products are being manufactured in such a property? Transaction patterns, are they consistent? Are they talking to the type of business that a person is engaged in? Cash payments. Cash is always high risk, colleagues. So when you're dealing with cash, you must manage that risk in a proper way or in a proper manner so that you make sure that there are no shortcomings when it comes to dealing with the risk that is posed to the organization by cash. Is this a face-to-face transaction or is this an online transaction? I made an example earlier with Chile and Bolivia. So if someone is from Chile and Bolivia, have you seen that before? What type of business are they engaged in? What is their source of funds? And then are you comfortable with the identification of risk that your organization is exposed to? And then will you be able to say that no, this type of business that you are entering into, and these funds are used for this specific reason? Geographic area, are you close to the border or are you far from the border? Are you in a region that maybe has a higher risk relating to diamond smuggling, or are you in a region where maybe there's proliferation of weapons of mass destruction? And then how do you mitigate that risk that you are exposed to? If you're dealing with clients from those regions as well, from those areas as well, have you identified the risk that you see? Colleagues, you know our business is far better than us. You are in these entities or this is your operation partner, colleagues. You know exactly what's happening. So we won't be able to tell you some other risks that you might identify when you're dealing with the people in your environment. You know better than us, and then you will be the one who will give us a clear idea of how an RMCP or a risk management compliance program should look like, and then what types of risk you can identify, and then how do you mitigate that risk. South Africa before, when it comes to compliance with money laundering or terrorist financing obligations or rules, we were following a rule-based approach. Many people saw it as a tick box exercise, but a rule-based approach, it was it's either you comply or you die. But now people started complaining and said, no, a rule-based approach is too rigid, it's not flexible enough to accommodate the type of businesses that we have. So we moved following the international standards to this approach. Now you are allowed to comply. The only thing that you need to do is to make sure that you mitigate the risk, and then you report anything that's illegal or is not doesn't fall in place when it comes to money laundering or terrorist financing. So that's the direction that we're moving towards. And then you as an accountable institution, we hope that you follow the international trends and international standards and allowing South Africa to be actually back where we're supposed to be when it comes to issues like grey listing. One of the things that we need to address in the coming few months. So now colleagues are going to look at registration in terms of the FIC Act. So Section 43B of the FIC Act requires all accountable institutions and reporting institutions to register with the FIC Act, or with the FIC actually. How is this done? This is done on the platform which is called GoML. So GoML is available on the FIC website, and then earlier my colleagues Michael actually requested you to complete the register for attendance, and then we'll send you these slides, and then you can go to that window, which is goweb.fic.so.za, and then you'll register there, and then that's how, as an accountable institution, you must register. Apart from that, colleagues, for any other thing, okay, that link actually is also available from the FIC website. That's where you'll be able to access the registration platform that we use for accountable institution. The question is, who needs to submit the registration information? So the first person who needs to submit this information is a compliance officer. All accountable institutions, they need to appoint a compliance officer. And then there'll be additional users apart from the compliance officer. That's a money laundering reporting officer, and then who will be reporting on behalf of the organization. Sole proprietors, that responsibility is normally taken on by the owner of the business or anyone who's appointed as a compliance officer on the sole prop. So this registration must contain the particulars as required by the FIC Act. For more information on these, colleagues, please don't hesitate to consult Public Compliance Communication 5B, which is available on our website. Apart from Public Compliance Communication 5B, there are also a lot of other public compliance communications that are published by the FIC. These actually they form this public compliance communication and guidance notes. They form the basis of the information that is required for you or of you to comply with the FIC, and they give us more detail than what maybe we can get from the sections of the FIC Act. And then supervision enforcement approach. Now, colleagues, we can't hammer this word more than we can do now, colleagues. Risk-based approach, risk-based approach, risk-based approach. So that's what we are looking at. You as an organization as well, colleagues, you need to apply the risk-based approach. But if you have not yet registered and you're a high-value goods dealer, please, 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 please register as soon as possible so that you will comply with the FIC. So now we're looking at those new accountable institutions that became actually accountable institutions due to the amendments of Schedule 1 of the FIC Act. So the FSC is on registration, guidance, monitoring of compliance, and sector risk assessment. So this is what we're trying to pull to colleagues. And then apart from that, we won't put in any less emphasis on inspection of enforcement, but the FIC may conduct inspections on issues that are relating to academic institutions or high value good dealers that have not yet registered. So that would be an approach, a stick in the hand approach. But colleagues, we want you to be proactive. We want you to register, comply with the FIC Act. So before there be any supervision or any enforcement or any someone from the authorities come and visit and check the type of business that you're entering into, and then you find yourself being non-compliant at any given moment. So we are just trying to emphasize registration again, colleagues. Please register as soon as possible to commence reporting suspicious transaction or any unusual transaction. And you must also submit other reports that are required of you. I said that no, it doesn't mean that if you see any transaction that's above 100,000, you have to report. You only report if you receive an amount of 50,000 rands or more, and then you have to report to the FIC. If you see any transaction that is suspicious, you report to the FIC. If you see that the property or the client that you're dealing with could be a terrorist, and then you must report to the FIC. If, for example, let's say there's a cross-border transactions that are happening according to Section 31, that's the time that you have to report. So that's what we need to take out of today, colleagues, that no, it doesn't mean that automatically I have items of more than 100,000 rands. Now, I've registered to the FIC, I must report anything that's above 100,000 rands. Nope, that's not how it works. 100,000 rands is a benchmark for registration, and then the other reporting applications will come into effect. So now we're going to look at the existing accountable institutions who've been part of this now broadened description. Before, under this section, we had crude rent dealers and motor vehicle dealers. They form part of this accountable institution. But after the amendment, everyone else was included. And then this was a requirement actually that came into effect due to, in 2019, there was a mutual evaluation that was conducted on South Africa by Financial Action Task Force, FATF. FATF was looking at the financial state of money laundering in South Africa, and then they were asking some few questions on how does South Africa deal with money laundering. And then after 2019, and then there was COVID, it took them longer for them to come back with a report. And in 2021, they issued a report saying that no, South Africa has to do a lot so that they can counter money laundering and terrorist financing. So that's when we received a report back in 2019, and then after back in 2021, after 2021, and then I think early this year, around February, we received news that we were grey listed. So now, colleagues, let's work as a collective so that we try to mitigate and redress all those findings and make sure that we get out of the grey listing period or grey listing list, and then we are a better economy, the one that we are very capable of becoming. So apart from that, colleagues, for existing academic institutions, the FIC will continue to apply a risk-based approach to inspections and enforcement. So these will include legal practitioners, property practitioners, gambling institutions, motor vehicle dealers, and trust and company service providers that have been regulated for many years. And some of them, or most of them, are in compliance with the FIC Act and should not be in dispute of these new amendments or changes provided by the amendments. So we can, once we are not compliant, colleagues, and then there'll be some administrative sanctions that might be actually handed over to you. This would also include financial penalties, and these are likely in cases of the FIC Act non-compliance. So if you're not registered, for example, you might be facing a situation where you have to pay a penalty. In some instances, you might even have to spend some time at a correctional facility. So colleagues, so as I mentioned a bit earlier, so when, for example, you are not compliant with Section 20A, 21, 21A to H, you might be liable for a fine of up to 10 million rands if you're a national person, or 50 million rands if you're a legal person. And then there will be no criminal sanctions against you when it comes to those specific sections. But for record keeping, if you are not keeping a record as required by the FIC Act, you might be actually fined liable. That you might pay actually the same amount, and then so it goes. So that string that you see now in your monitors is a possibility that if you're non-compliant with the FIC Act and you're found wanting after all the due processes have been followed, you might be fined in such a way. But we don't want to get here, colleagues. We're not approaching you with a hand in a stick manner. We want us to be proactive, to register and make sure that we comply with the FIC Act in every way or every manner that we can. And then apart from that, colleagues, I'll say, so now we're going to look at submitting a risk and compliance return. On the 31st of March 2023, colleagues, there were two directives that were issued, Directive 6 and Directive 7. Directive 6 was to inform all accountable institutions that are designated non-financial businesses and professionals. Those are DNFPPs. So those will include legal practitioners, trust company service providers, and property practitioners, and credit providers, crypto asset service providers, high value goods dealers. So those are institutions that are targeted by these directives. So, colleagues, please, if you're an accountable institution and then you are mentioned as item 1, 2, 3, and 9, 11, 14, 20, 21, and 22, please go to the FIC website and then look for a compliance risk return. All of you colleagues need to complete the compliance risk return. So this information must be submitted by the 31st of May 2023 for new accountable institutions. For all accountable institutions, actually, for all the accountable institutions who have been part of the FIC domain, they need to complete the compliance risk return by 31st of May 2023. For new guys who just became accountable institutions recently, they need to complete this online form by the 31st of July 2023. So, as I was saying on our last bullet point, we're saying that new accountable institutions by Directive 7 would have to submit available data as they were only considered to be accountable institutions from the 19th of December 2022. So, what you have from the 19th of December 2022 date, that's what you have to report on if you are a new accountable institution. So, for those guys who are going to register after this session, because I believe that some of us are going to register after these sessions, for those who have not yet registered, follow the process. Look at your organization, make sure that you follow the applications as required of you by the FIC Act. Once you've complied, you've applied a risk-based approach, you have an RMCP, you conduct customer due diligence in your organization, you identify and verify your clients, you keep their records, and then you train your staff. Make sure that you complete Directive 7 as well. And then so that we will have a clear indication of the risk related to money laundering in South Africa, and then we'll be able to report adequately to bodies like the Financial Action Task Force and other supervisory bodies or other FIUs that are our colleagues during peer reviews when we engage on issues relating to money laundering, terrorist financing, or proliferation financing. Thank you, colleagues. Without any further delay, I'll hand back over to my colleague, Michael Atkins Campbell. Colleagues, if you have any other questions, please don't hesitate to give us a call on our Compliance Contact Center. The number is 012-641-6000, or visit our website to look for any information that you would like to learn more about. Thank you very much, colleagues. Mike, over to you.
Perfect. Thank you so much, Spoo. So at this stage, I see we've got some good questions coming in. At this stage, if anybody has not quite filled in the attendance register, we will give you guys 5 minutes just to collect your thoughts, add any further questions to the chat box, And if you can complete the attendance register as soon as possible, and at the same time, if you could also complete the survey that we will be placing in the chat box as well. And just on that note, I have added some links to some guidance products that we have worked on over the course of the last couple of years. So they are generally for new accountable institutions, such as the reference guide for accountable institutions, guidance note 7, which is applicable to risk, PCC 53, so that relates to the risk management and compliance program that was discussed in this webinar today, because of course the RMCP plays into the risk-based approach, which is incredibly important these days, especially as a result of FATF and so forth. And furthermore, if anybody feels like one of the questions hasn't been answered this morning, I did send a link for you to send a public compliance query. At the FIC, we call it a PQP. So I'll add the link for that this morning as well. So I see here from Johan, we will repost the link for the attendance register. Just to answer that question quickly from Silvana, the registration with the FIC on GoML does not cost anything. The registration is free. Okay, so we will just give you 5 minutes. If you guys want to send in any more questions, please feel free to do so. And if you can complete the attendance register, that would be great. Thank you. We'll touch base again at 5. You're gonna be so Okay, perfect. Thanks so much, guys. Hopefully you had enough time to think of some more questions and grab a cup of coffee. Okay, so just to address the elephant in the room, with regards to the International Funds Transfer Report, or the IFTR, I see we got a couple of questions in that regard. So just to start on that one first. So it's quite important to keep in mind that only people who are authorized with regards to the Foreign Exchanges Act, I can give the more technical name for the whole legislation, but ultimately only if you're authorized to deal in foreign exchange or forex would you be required to submit an IFTR. So that is very specific people. So that would be authorized dealers, banks, financial services, that sort of thing. So it's very specific people that would be expected to submit those reports. One of my colleagues mentioned that it's essentially outside of those people, it would be 2 or 3 or a handful of people who, in terms of financial service providers, that would need to submit that information, and of course the post office. So just to reiterate, so it's authorized dealers with limited authority, and specific category of financial services providers that have direct reporting to the South African Reserve Bank in terms of exchange control, and the post office. So unless you specifically have discussions with the South African Reserve Bank with regards to foreign exchange, only then would you need to submit IFTRs, international fund transfer reports. So if you are interacting with a client and they send you an EFT from overseas, most likely your bank or the person who is providing that service for you, they, for example, would be submitting an IFTR to the FIC. So hopefully that cleared that up, because that is a question we get relatively often. So for IFTR, it's very specific, authorized dealers and so forth, very specific institutions that would need to submit IFTRs. If you're not 100% sure, please feel free to submit a compliance query to the FIC. That was posted a little bit earlier on in the chat box. You don't want to go through the hassle of completing the IFTR only to get it rejected by the FIC. So 99% of the time, you won't need to submit an IFTR unless you're authorized to deal in foreign exchange in terms of the Foreign Exchanges Act and requiring specific permission from the South African Reserve Bank, et cetera, et cetera. Okay, so hopefully that clears up that question. Okay, so Spoo, I will direct this one to you. You touched upon it a little bit earlier on, but just to specifically answer this question. So somebody asked relatively early on in the webinar, does this mean you must effectively conduct CDD on every customer regardless of the size of the transaction?
Thank you, Mikey. So if you are an accountable institution, yes, you must conduct CDD on all the clients that you're dealing with. So the level of CDD will be based on the risk that you have identified your client should be exposing your business to, or the risk that is paid to the client, him or herself, or the business that you're dealing with. So customer due diligence, colleagues, we have to look. For example, we made an example with a 5,000 rands, a single transaction. If you are dealing with someone that is only going to pay for an item that is worth 5,000 rands, the only thing that you need to do with that person is to identify and verify. So identifying and verifying the individual, that is the information that is detailed on your risk management compliance program. You can just ask maybe for a passport and the proof of residence. Proof of residence, it would be whatever you determine as an organization. Identity document, it could be a driver's license, it could be a ID book, it could be a passport. Based on the risk that actually is being that actually was actually identified per client. So apart from that, colleagues, to the client pose more risk, you must do enhanced due diligence. So enhanced due diligence, now you'll be asking further questions, so you'll be probing more. You'll be going to issues like source of funds. You'll be asking questions like identity document, and then that's an additional due diligence or enhanced due diligence. But should the client pose more risk, you ask more questions to the specific client. You are not only going to ask for an identity document or a proof of residence. You'll go a step further by asking more questions to the client. For example, if a client is a politically exposed person dealing maybe with procurement at a state department, you need to ask more questions to that individual, so that you make sure that should there be any risk that individual poses to you and the business, you're able to mitigate that specific risk. So all clients should be identified and verified, but the levels of customer due diligence that is required depends on the risk that you've identified after applying the risk-based approach. And then you have the measures on the risk management compliance program in place to identify the different levels of risk that you have. If, for example, we have clients who are in a low bracket of risk, you'll determine how those clients are identified and verified. If we have medium risk clients, you'll determine how you identify and verify or conduct customer due diligence for those clients. If you have high risk clients, and then now the level or the intensity of customer due diligence will be different from your low clients, and the intervals or the periods that you're going to conduct this customer due diligence on those clients will be different from your low clients. So all this information should be in your risk compliance and management program, so that you know that even the people that are in your organization, your staff, for example, they know how to risk rate a low risk client, a medium risk client, or a high risk client, depending whether what form of risk you're looking at. We know that all organizations won't be risk averse. It doesn't mean that if you're in an organization, you'll be risk free by all means. Whether it could be inherent or residual risk, you must table it on your risk-based approach. Put it tacitly in writing on your risk management compliance program. So that will include your customer due diligence. Customer due diligence, how do you deal with your low risk clients or how do you deal with your high risk clients or medium risk clients? And then customer due diligence as an accountable institution must be conducted. You cannot enter into any business relationship with anonymous persons or clients. You must identify and verify those clients. But customer due diligence will be only looked at depending on the level of risk that your entity is exposed to when you're dealing with a entity or with a business or a client. Thank you, Micah.
Oh, perfect. Thank you so much, Spoo. So with regards to the second question, is there a standard template to be used for customer onboarding where the transaction value exceeds 100,000? I'll give it a shot. Spoo, if you want to add anything, please just shout. So with regards to the standard template to be used, I would suggest you take a look at PCC, that is Public Compliance Communication 53 and Guidance Note 7. So the purpose of that is just to provide a bit of a template and some background in how to screen your employees. As Boo mentioned, of course, risk is incredibly important in this area. So there's what is known as a risk matrix. I suggest you start from there to determine if the customer is a low, medium, or normal, and then high risk. And you can, based on the risk classification, you would be able to determine if you need to provide simplified due diligence, customer due diligence / additional due diligence, and of course, enhanced due diligence. Of course, in this industry, there's a lot of terminology that I'm throwing around. So if you're not 100% sure what I'm talking about, when you read that documentation, that stuff will become clear. But let me just add, enhanced due diligence, that would be people who are known as PEPs, politically exposed persons, and people who are determined to be high risk. As Boo mentioned, of course, we don't like telling institutions how exactly they should go about conducting customer due diligence. But to be honest, you can't go wrong with requesting a copy of their ID / passport, of course, depending on their citizenship. And then you can determine for yourself which other identification documents you can use, be it a proof of residence, or if they're renting an affidavit, as well as their rental contracts and that sort of thing. But we don't like going into too much detail because, of course, we would prefer not to tell you guys what to do. We don't want to be too prescriptive in that regard. So hopefully that helps a little bit. Okay, so fairly straightforward questions. So I'll just answer this following one as well. Does this apply to all sizes of businesses, regardless of size, and a startup? So yes, unfortunately, this applies to all accountable institutions. If you provide the services or the profession that is contained in Schedule 1 of the FIC Act, so specifically for this webinar, if you are a high-value goods dealer, you would need to register, regardless if you are a one-man show, if you are a medium-sized organization, if you are a large organization, and if you have just recently started. But if you were to be inspected by the FIC, we would take that into consideration, and your RMCP, your risk management and compliance program, that would be altered, taking into account the size of your organization. Okay. So this question, I'm not 100% sure what they're asking. So it says, is this a general thing or just us? I'm assuming that is referring to the FIC Act obligations. Spoo, do you want to give that a shot?
Thank you very much. I agree with you, Mr. Campbell. I'm not quite sure whether they're referring to high value goods item, schedule item as a whole, which is item 20, or are they referring to anything that's specific that we discussed during our sitting? But if we're referring to the amendments that were brought forward by the changes on the schedule items of the FIC Act on the 19th of December 2022. Yes. Another example that maybe some people maybe heard us talking about is that, for example, if let's say you are selling antiques, and then one of the items in your antique shop is more than 100,000 rands, that means you're a high value good dealer and you need to register with the FIC. A friend of mine who is a farmer somewhere in DR, he has one bull of Cementala or Beefmaster. So this bull is worth 105,000 rands. Yes, he has to register as an accountable institution because now he's selling goods or a product in his business that is more than 100,000 rands. That's a high value good. And that individual will be a high value good dealer. So the spectrum is very, very huge at the moment, but in the coming years or coming months, colleagues will be able to refine it so that we have targeted the specific markets that we are trying to deal with, and then we're looking at it. So it is generic, it is applicable to anyone who is a high value goods dealer. That person needs to register with the FIC. I hope I responded well. Thank you.
Perfect. Thank you, Spoo. So yes, the next question related to how do you register with the FIC? I answered it in the chat box, but in case the person submitting the question missed it. So what you would do is please go to our website, www.fic.gov.za. There should be a light blue banner that says click here to register or report. If you click on that, there should be a option for you to register or log in. Then you would click on the register box and try to complete that in as much detail as possible. There was a second question that was linked to that, asking what documents do you need to attach for the registration. So it should be on the website itself as well, but it is sometimes missed. If you can please attach a copy of the compliance officer or the person registering the institution, which should theoretically be the compliance officer. If you can attach a copy of their ID and an authorization letter confirming that the institution appoints that person as the compliance officer. So both of those, if you could attach both of those documents when you are registering on GoAML. If you would like for a bit more detail with as a step-by-step process, you can click on the compliance queries, which is in the contact us page, or should I rather say banner on the FIC website. Compliance queries, I've also pasted it throughout the chat box. Hopefully you have seen that. Okay, so several other questions came in with regards to the cross-border / IFTR. Hopefully, I was able to shed some light on that regard. But high-value goods dealers, just to reiterate, generally, you wouldn't need to submit an IFTR to the FIC only if you are an authorized dealer or you're authorized to deal or transact in foreign exchange with the South African Reserve Bank in terms of the foreign exchanges control regulations. Okay, so so the clients say they don't want to give their personal information. What about the POPIA Act? So the POPIA Act does have certain exceptions, and one of them would be in combating crime in the country. So, and that is the main reason why the FIC, and of course, Parliament has recently amended the legislation to include new institutions such as yourselves. We don't add these regulations just for the heck of it. Ultimately, we are trying to pass these laws, these regulations, and this guidance in order to combat organized crime, corruption in the country, financing of terrorism, proliferation financing, that sort of thing. So I can imagine a lot of this information is quite a lot, especially it will be new to most of yourselves. But the purpose of it is to ultimately catch people who are trying to filter illicit funds through the financial industry, such as purchasing of art and that sort of thing. So yes, I understand this. Quite a lot of this is information is new, and it adds quite a few obligations to yourselves. But the purpose of it is to combat financial crime. That's what matters at the end of the day. Okay, is there anything in that regard? And as a result of the POPIA Act, you can tell them that the information being requested is an exception to the POPIA Act. If they are incredibly reluctant, if they don't want to proceed, then you may need to consider if you perhaps need to submit a suspicious and unusual transaction report, but that would be your decision. But you can tell them in terms of POPIA that you are entitled to request this information. Okay, so do you want to add anything further to that, Spoo? Okay.
I totally agree with you, Mr. Campbell. I always say Mr. Campbell and Mr. Campbell Atkins. So let me get it right from the beginning. Mr. Campbell Atkins. So, colleagues, with the POPIA Act, a lot of people have been saying that. So we should remember that with the POPIA Act, we are allowed to collect the information, but the information should be collected for the purposes of what that information is going to be used for, including the details of the obligation. So when you put in POPIA Act and the FIC Act here, the FIC Act requires that if you are going to transact in any form, let's say you are a bank in South Africa, you are required by that act that you need to identify and verify the person, because you cannot deal with a person who's not identified and verified. So the FIC Act in that instance, including the POPIA Act, the POPIA Act said that that information can be collected. That information can be given to a person who has authority. It doesn't mean that that information cannot be given. But the information, once it's given, it should be used for the purpose that information was collected for. So I totally agree with Mr. Campbell Atkins that no, yes, you must get information. The FIC Act trumps actually POPIA Act when it comes to identification and verification of clients where for different specific transactions. That information must be collected for the purposes that the information is going to be used for. And the POPIA Act allows us to collect that information for the purposes of the FIC Act or countering money laundering, terrorist financing, and proliferation financing. Thank you.
Perfect. Thank you, Spoo. Okay, so it was touched on a little bit earlier, but just to reiterate, as this topic is quite important, specifically in this sector. So somebody asked, if you don't deal in transactions above 100,000 Rand, are you required to register?
Oh, thank you very much. For high value goods, yes. Now we have to look at the item 2, the schedule 1 items of the FIC Act. So we have items ranging from item 1 to item 22. Let's say, for example, now you are not offering high value goods, but you offer credit in your establishment, in your business. So when you offer credit in your establishment, we haven't looked at item 11 yet, but anyone who offers credit in South Africa in any form, they need to register now according to schedule 1 item 11 of the FIC Act. If we offer any form of credit, you need to be registered as an accountable institution. So now there's this thing that is called dual registration. Later we are going to look at dual reporting as well. So let's say my institution, I'm a jeweler, or I'm a diamond dealer, or maybe I sell precious stones or and metals. Now I sell these precious stones. Some of them would be above 100,000 rands. So I have these rare gems and stones that some of them, a unit of it will cost more than 100,000 rands. And then some, I also, apart from these units that cost 100,000 rands, I also offer credit to some people. And then some, the credit would be of any item less than 100,000 rands. So this is a scenario that we're painting, colleagues. So if I sell some of my goods that are more than 100,000 rands per item, I must register according to what is required of me, according to what is required by FIC in terms of item 20 of the FIC Act. But if I don't offer anything that's above 100,000 rands in my business, I only sell items that are 80,000, 99,000, or 50,000, 10,000, 5,000 rands in my business, and then I don't sell on credit, I don't have to register with the FIC Act if I offer anything that is not of high value. Yes, so that's for high value goods purposes. On the other hand, if I offer credit of any form for any amount in South Africa, I must register in terms of item 11 of the FIC Act. So now there's another form of registration. So the only thing that we have to look at, colleagues, that from item 1 to item 33 of the FIC Act, do I fall in within any of those spaces? So if I only offer, I'm a small scale farmer, I'm good farming these days, and I'm also selling, I'm only selling not rare items. Maybe I'm farming wine somewhere in the Eastern Cape, and then my items that I sell are less than actually 100,000 rands. So whether it's a box of 12 wines or a single bottle of wine, which is less than 100,000 rands, I don't have to register. But should any of my items be above 100,000 rands, then I will have to register, because I'll be regarded as a high value goods dealer, and then I'll have to report in respect to those high value goods in my entity. I hope that covers the question, Mike. Thank you.
Perfect. Thank you so much. Okay. Okay, so I saw there was a question with regards to cross-border money movements. Hopefully we were able to answer that question sufficiently. But if you are selling your goods online, you would, and they are paying by, in terms of EFT, I assume they wouldn't be paying cash. If it's by EFT, then you wouldn't need to submit an IFTR report due to the above mentioned queries previously. Okay, so if an institution has registered but hasn't had any suspicious or unusual transactions to report, which other reports would need to be submitted? You would need to submit a cash threshold report, as mentioned above, and of course, STR reports. You did mention there's not any suspicious or unusual transactions, but Section 29 or STR reports is relatively broad, so that would take into account targeted financial sanction if the client is on their TPR reports and that sort of thing. I see my colleague would just like to add a little bit further in that regard.
Oh, thank you very much, Mikey. I see that there's a hand from Elegance. I think maybe we can unmute Elegance and hear what is the take or what is the question that Elegance has. Elegance, please go ahead. Unmute. You can unmute yourself, Elegance, and go ahead. I'm not hearing a word from Elegance. I thought maybe, I saw that the hand raised up, and I thought maybe she wanted to,
Hey, guys.
she wanted to ask a question for us.
Okay, can you hear me?
Elegance, please go ahead if you can hear us, or it seems if you're unmuted. Please go ahead.
Yes, I'm unmuted. I would just like to raise the question. We are a retail company selling high valued goods. And obviously you'll have clients walking in and out of your stores with no documentation on them. Now, in order to, what I presume you would then declare these transactions anonymously. Firstly, how are you going to get information from your client? Secondly, if they come in with no documentation, how are we to obtain the information? And then also on a once-off sale, get all this detail relating to the party and all his other parties. If that question can be answered for retail, I think that would be a good question to be answered.
Thank you very much, Elegance. Okay, for retail. So now, you remember that we're dealing with high value goods, and then let's say high value goods specified for this instance, and then we are applying this risk-based approach. So for your own entity, what the FIC has done, we threw the ball into your court that you need to identify the type of transactions that you regard as a high value that will need to be identified and verified. So everything else, we're not coming with a rule-based approach, it's a risk-based approach. So you analyze your own risk, put in a risk management compliance program in place afterwards, and then you look at the type of identification and verification, and for which specific items identification and verification will be required to be conducted. Once you have that in writing and you put that down in your risk management and compliance program, should there be any authority or relation to money laundering, should they come and knock on your door, you will show them that you have your risk-based approach document or program. And then these are the items that you regard as high-value goods or high-value goods that you're dealing with. So for identification and verification, you've requested a copy of the ID document, a copy of the passport or the passport itself, a copy of a driver's license, or maybe proof of residence. So for all small transactions, that's all that is required. For identification and verification, you need to determine on your RMCP. That's for me to identify the person that I'm entering into. In olden days, when this form of requirement went into banks sometimes will send their consultants to a place where that person stays. If someone stays in a rural area and they don't have a formal address, they will go. A consultant will go and then will say that, no, I know that this person stays here. I seen him staying here, and then he put it in writing and said that, no, I know that I've identified and I've verified that this is a person I'm dealing with. He's not anonymous, and then he's a person that I'm dealing with. But with evolution of technology and everything else, people now in these days, people are identified electronically. Someone can send you a document that is verifiable, that no, this is me, and then this is my address, and then you can enter into business with that particular person, because it is a requirement of the Act that we cannot conduct transactions or businesses that are anonymous. So I don't know whether that I've covered the question, but the floor is open. You can you can shoot with a follow-up question. Thank you.
Hello?
Jonathan, please go ahead.
Hi. Okay, so it's about this retailer thingy because I'm on same thing with Elegance. I'm a electronics shop business. We sell TVs of 100,000 K. So obviously those are seen as our high valued goods, and thus we now accountable institute. But in the same stance, I've got hundreds of clients going through my store, each buying a console of PlayStation 5, 14,000 Rand, coming in buying games of 1,600 to 2,000 Rand. Then I also have clients coming in with buying headsets of 5,000, 6,000 Rand. Getting an ID for every single client will be impossible because there's people walking through malls and that kind of thing. Or is there like a threshold? Like we say, we do the FICA for your high risk transactions, which you have 50,000 cash transactions, and your 100,000 Rand goods. Or are we going to be seen as non-compliant because we're not getting an ID for every client coming in to buy a console of 14,000, or getting an ID for every client with a game of 1,500 or a headset of 6,000 Rand? Where is that threshold? Where is that cutoff? Because I can understand doing the high valued goods and knowing your client there, but knowing every single client that walks through a retail store. I've got over 20 stores of seeing clients of 1,000 clients a month, and getting IDs of every single one is also going to cause a major record keeping issue. If I'm keeping records of anyone buying something of like 1,000 Rand, that's what we're trying to understand from a retailer's perspective.
Thank you very much, Jonathan, for that question. And then, actually, I think you're not the only one who's concerned about the type of businesses and transactions that we have. A bit earlier, we at a very high level, we talked about the risk rating of our businesses. So I think maybe what we need to highlight as well is that we don't only maybe risk rate the transactions through I'll say that. Let me rephrase it. Let me say that, we don't only look at the amount that we're paying for. So apart from the client type that we're looking at, we'll also look at the products that we're offering. If, for example, I'm selling Beats headsets for 7,000 rands, or for 7,000 rands per headset, that's a low risk compared to a television set that is worth 200,000 rands or 500,000 rands. So on my risk-based model or risk-based compliance program, I will exclude anything that is low risk, like headsets, and then only focus, or this is an example, colleagues, I'm not saying that this is cast in stone, only focus on the goods and products that are high risk, and then I'll be able to report on the goods and products that are high risk. That will include the type of transaction that we'll be looking at. For example, there was someone who is on a retail space. That person was selling Apple cards. Those Apple cards that you actually buy to buy Apple products. So in this instance, this person bought those Apple cards worth 3 million, and then after after buying those Apple cards from different stores, which are worth 3 million, he used that money and then gave it to other people to go and buy products and sell those products from those Apple cards. At the end of the day, it transpired that no, that person was just trying to hide the money that he was getting from rhino poaching. So it happens that we look at the transaction itself, but we just put it in our risk management compliance program that no, these don't form part of the high risk, unless if the transaction is irregular or the transaction does not make sense anymore, and then that's when you'll be required to report. But if the transaction is small and then it is reasonable and it is within the auspices of what the business is about, I don't think that for every small transaction that needs to be required, you need to be worried about. So look at the product type, look at the type of transaction, look at the client, restrict your business. After restricting your business, it will be easy for you to know which part needs mitigation, needs monitoring, needs management. You focus on that part that needs monitoring management, mitigation, and then those are the reports that you need to submit, but not everything that even does not form part of what is required to counter money laundering or terrorist financing, including proliferation financing. Thank you, Jonathan. Back to you, Mikey.
So we're just experiencing a small technical issue. We're going to work on requesting Elegance's mute. We are currently using a new program, so sorry if I'll just take a moment. We'll just be 1 second. Thanks.
Should we ask Verna? Let's.
Speaker.
Perfect. We can hear you. Go ahead.
Okay, so the final question that I just would like to ask if I have a client popping into our shop, buying an item for 120,000 Rand cash, he's a walk-in, and the only thing that he gives me is a name and a surname, which I still can't verify, regardless whether he's a local or a foreigner. How do I treat that transaction? I'm not going to turn away a sale of 120,000 Rand. Secondly, how do I then report on such a transaction if I don't have any details except for a set name and surname, which can be anything? Because I've got no confirmation of that is the actual person standing in front of me at the shop at that time. If someone can just answer me that question, I'll really appreciate it.
Thank you very much for that. I think it's elegant. Elegant.
Yes.
Once you have an item that's more than 100,000 Rand, a bit earlier to our presentation, we requested that no, you cannot enter into a transaction with anonymous clients. If you don't know the person that you're entering into business with, you cannot establish that business. I understand that it's a lot of money, it's 100,000 Rand. But if you can't identify and verify the person who's coming to you with that money, you cannot enter into a business relationship or perform any transaction with that particular person. That's a requirement of the FIC Act. There's an obligation that is bestowed on us by the FIC Act. And then if we cannot verify and identify this specific person, we are not allowed to conclude a transaction or enter into a business with such a person.
Okay. Yes, we will get to some of the hands that have been raised, but there's just one question to give my colleague a bit of a rest. I'll just answer one of the questions. So somebody asked if we just registered now under item 2 of Schedule 1, is the due date still 31 May 2023 for the risk and compliance return? So ultimately for item 2, it is the 31 May, and for the new accountable institutions such as high value goods dealers, that would be 31 July, because we don't expect new accountable institutions such as yourselves to have all that information on hand. So for the new accountable institutions such as high value goods dealers, the due date is 31 July. For existing institutions such as trust company and service providers, which is item 2, item 1, which is attorneys, 3, which is estate agents, and number 9, if you could submit your returns by 31 May 2023. That would be greatly appreciated. And I did see a couple of questions with regards to credit providers. Unfortunately, it's kind of outside the ambit of the webinar that we are discussing today. So if you guys don't mind, we are just going to be referring you through to the guidance. There's also going to be a session specifically focused on credit providers, which is going to be within the next couple of weeks, because we do understand there are quite a few questions with regards to credit providers. So we prefer to focus on each industry as on its own as like a silo, if that makes sense. So we will just request that you guys attend that webinar. That's going to be within the next couple of weeks. and we will direct you to the guidance. I'll just post it in the link now. Yes, my colleague advised that somebody has raised their hand. If you can go ahead, we'll just organize for your microphone to be unmuted. Thanks. Brilliant. Go ahead. Are you still with us? Brilliant.
Let me know.
Yes, we can hear you.
Okay, great. Just to take you back a little to this retail scenario, for items that would be less than 100,000. Use an example for your headsets and so forth. For those transactions, because now I do not obtain any form of identification on my customer, would I then not be seen being in breach of, is it section 20A for single transactions where I didn't obtain any form of information for that client or for that customer? Thanks.
Okay, no, perfect. Thanks, brilliant. Yes, so that's correct. So we are just going to use some of the examples that you and Elegance mentioned earlier. So if it's a low-risk product such as a headset, PlayStation game, I can imagine cell phone chargers, cellular phones, other products that are relatively low value or at least certainly below applicable thresholds with regards to reporting and are considered to be low risk. We wouldn't quite expect you guys to be conducting customer due diligence on every single customer that walks into the store. It would only be for the high risk products and for the products that are for substantial amounts. That is when we would expect for the customer due diligence to kick in. If you don't mind bearing with me one moment. Okay, cool. Oh, no, perfect. Okay, so hopefully that answered your question. I did see here, I may have missed it, but with regards to the sanction screening, just a reminder, the sanction screening, targeted financial sanctions, they are generally people who are considered to be international terrorists or people who have committed war crimes or genocide, those sort of things. So they are not placed on those lists lightly. So specifically for those reports that are submitted to the FIC and for the higher risk products, we do suggest that sanction screening takes place on all of those customers. Okay. Okay, so if our goods are low value items, but as a manufacturer and wholesaler, all transactions affected are always above 100,000. As no one item is ever 100,000, we aren't high value goods dealers, and there are never cash transactions. We have 4 customers we supply. Do we need to register as AIs, or can we just do our CDD to ensure we are not dealing with persons on the sanctions list? Spoo, would you be able to tackle that one?
Thank you very much. On that one, we are still looking at it because now, as I was saying, in most instances, it's a business to business, and then in most instances, you are not dealing with individuals who will be involved in corruption or trying to clean dirty money. So you are only having 4 clients. The only thing that's important, I agree with you. You must conduct follow the RPA process where you're going to check and analyze the type of business that they're entering into, and then the type of clients that you entered into business with, and then do they pose any form of risk when it comes to sanctions or when it comes to money laundering. But one of the most important things is to identify the ultimate beneficial owner on those companies so that you know that no, the person at the end of the line who will be getting or receiving the transactions or the money from that business is not linked to a terrorist organization, or that person is not linked in any form to corruption, malnourishing, or any of those things. So risk-based approach, apply the principles, have your own program and management plan in place, and then make sure that you identify and verify such a person, and then you can enter into a transaction with such an individual. Thank you.
Perfect, thank you. I see one person asked a question with regards to their landlord. They are requesting documents on behalf of the FIC. It's not really in connection with today's webinar, but I can answer that in the short form. If you would like for a bit more of a detailed answer, please submit a query to us on the FIC website. You can submit a compliance query, but ultimately, if they are requesting that information, they are certainly entitled to do so, as they are considered to be an accountable institution. So hopefully that helps. Even if you are renting, purchasing the property, similar questions would be asked and that sort of thing. But as I mentioned, I'm not really going to go into more detail because we are trying to focus on high value goods dealers today. So yes, I see here Elegance just asked if we could unmute him at this stage. Please go ahead, Elegance. We are just going to submit a request for you to unmute yourself. Thanks.
Thanks for the opportunity. So the basis that I'm coming from retail, I know what you're saying and I know what the rules and the regulations are and all. The main thing is financially, economically, and business-wise, it does not make sense to turn away a sale. Turning away a sale means you earn less in your company, you've got less money to pay your staff, which will end up in job losses. Just because of one person, one reason of you not being able to positively identify your said client. If it's a once-off sale, that person comes in, he buys, you're never going to see that person again. Surely no other person in good business practice will turn away a sale of over 100,000 Rand just because of not being able to identify a client. It doesn't make sense. Logically, it doesn't make sense. What do we do? Because no one can say to you, you're not allowed to then not deal with this client. You're turning away a sale because it's now a client that you don't know. Can someone please assist me? Because it just doesn't make practical sense on how to do business in on that manner.
Thank you
And
very
I'm
much.
sure, and I'm sure a lot of the other jewelers on this forum this morning feels exactly the same, because we're all going to sit with the same thing. We've got recurring clients, which we obviously can do, no problem. But you do have once-offs that come into your shop.
Totally agree, Elegant. I agree with you. The environment is very difficult at the moment. And then I'll just paint a picture. I have my colleague, Michael. Michael sells stones that are very elegant and expensive. Client walks in, buys 5 of them, 500,000 rands, and then he pays in cash. I don't know, Michael doesn't identify and verify the client. After paying that amount for 500,000 rands, no one identifies and verifies that person. That client who buys those stones goes to another colleague of mine, Maxwell, and then someone else called Maxwell. He sells them half the price that he bought them for, and the other person sees them as a bargain. That other person who sees them as a bargain pays in cash or pays maybe using EFT, 500,000 rands, and then there's a mail sale, but now he sells them for 250,000 rands. After the person sells them for 250,000 rands, he takes that money, gives it to ISIS to come and bomb Gauteng, and no one was identified and verified. And then that's the question. That's cleaning dirty money, and then it is at a very maybe minute level, but that's what happens in most instances. And then some people will take that, and then they'll use that amount and for less, and then they'll use that money to do other things. So for identification and verification, we want to make sure that we counter money laundering in all aspects that we can. And then in most senses, if it's for identification and verification, we just want to know and see and know according to for money laundering purposes, so that we are aware that we don't transact or conduct business with people who might be a threat, or people who might be cleaning dirty money, or people who might not be of goodwill, and then they're using these illicit funds to do things that are out of this way. That's the highest level I can explain it, but that's the reason why the high value goods dealers are put in this situation at the moment, so that we'll be able to counter other aspects or other things that we are having a problem with as a country. Thank you, Elegant.
Just to add, because I understand certainly not everyone necessarily carries a copy of their ID, but if it is another identification document type, such as a driver's license, then of course that can always be used for the other products. Okay, so I see here somebody asked, apologies if they may have missed it earlier. So what do they do with customers who refuse to give them their documents to conduct customer due diligence? Do you stop the transaction, and do they have to be reported to the FIC? So on a general level, accountable institutions are not allowed to conduct transactions with anonymous or false, apparently false or fictitious names in terms of Section 20A of the FIC Act. So generally, you cannot continue with the transaction, and it will be up to you to submit the report to the FIC for suspicious and unusual transactions. But as we have been saying throughout the course of today, we wouldn't expect you to conduct customer due diligence on every single customer that walks into the store, such as purchasing a power bank or a cell phone charger. You wouldn't be expected to conduct customer due diligence on those persons. Is that good? Okay, perfect. Apologies if we haven't quite answered your question at this stage. There were a couple that came in, and we are dealing with a new program. So if I missed your question, my apologies in that regard. So I do see here there was a question with regards to the. So when is the due date for completing a screening process on existing employees in terms of Directive 8? So that is a good question. There's going to be a webinar with regards to Directive 8. For some of the people that aren't aware of this guidance, it's essentially the screening of screening of employees for competence and integrity in terms of Public Compliance Communication 55 and Directive 8. So ultimately, the purpose of that is to prevent employees who might be slightly dubious from entering the organization, especially for financial institutions and that sort of thing. So I won't go into too much detail because this is, of course, at a high level, and not everybody might be aware of that guidance. There's going to be a specific webinar in that regard. For existing employees, similar to what my colleague has mentioned above, or not above, should rather say previously, ultimately, we would suggest you focus on the employees that are considered to be a higher risk. So it's not, this example might not be applicable to everyone, but for example, people who are on the risk committee or people who fulfill their compliance function, it's suggested that those employees are screened first, and then it goes trickles down to the lower risk employees. We wouldn't expect yourselves to essentially have those processes in place immediately, because it is a governance question, it's a compliance process. So it will take a little bit of time, and we wouldn't expect you to have that information on hand immediately, but we would suggest that you review your RMCP and look at how you would screen your existing employees and have similar discussions in that regard. So as I mentioned, there's going to be a webinar specifically on that topic. If you would like for more information in that regard, or if you're not quite satisfied with my answer, some of the stuff, it's hard for us just to answer in a couple of sound bites. If you can please submit a compliance query to us. As I've mentioned throughout, there's a link for the compliance queries. If you can submit a query there. Okay. Most of these questions have been answered. Let's see if there's any more. Oh, okay. So with regards to the slides, they will be sent to all the people who have completed the attendance register. If you can please complete that as soon as possible. If we have, okay, so one more question. So Jackie asks if we have permission from Saab and export our goods. Sorry for that. It looks like I accidentally clicked down. We have permission from Saab. Okay. To export our goods, do we have to report these transactions? So ultimately, the importing and exporting of goods, we aren't really talking about importing or exporting. So that's a different kettle of fish entirely. So IFTR, International Funds Transfer Report, that is specifically if you have permission from the South African Reserve Bank as an authorized dealer or dealing with foreign exchange control regulations. So those would be authorized dealers with limited authority, or known as ADLers, banks, and some financial services providers. Those people would specifically need to be submitting IFTRs. So it would be ultimately a very specific sector or industry that would submit those IFTRs. So to be, for example, foreign exchange agents and those sorts of things. So I don't believe you would need to submit an IFTR unless I misunderstood your question. If you are exporting goods, chances are most likely that your bank would be submitting the IFTR to us. So I wouldn't be too concerned if that helps. It is a specific or very niche topic. So if you do want to read in further detail, you can check on the IFTR guidance, which is guidance note 104A, speak under correction. But I'll also put that in the chat box. Okay, so I see a person asks here, are we seen as a credit provider when we offer our clients to pay for their orders on terms? We are a low value jewelry wholesaler. Okay, Spoo, would you be able to tackle that one?
Thank you very much. I think the client's name is Vicky. Yes, Vicky. Okay, if you're a retailer, then the provision of credit is defined by the NCR, or not the regulator is National Credit Regulator, and then the act itself is a credit act. I forgot the name. But so definition of credit is defined under the Credit Act. But anyone who provides credit according to what the South African National Credit Regulator stipulates as credit, or anyone who provides credit in any form, those people need to register according to item 11. So credit is defined to the definition that is on the Credit Act. Credit Act is what I'm looking for. National Credit Act. So Credit Act is what is defined on the Credit Act, and anyone who offers credit out of what is defined of the Credit Act. So if you offer, if someone buys goods today and pays off over a period, according to the definition of the Credit Act, I think that will be a credit. So that person should register according to item 11 of the FIC Act, and then if there are any obligations that are vested on that entity, they'll be according to item 11 of the FIC Act. But when it comes to the other part, where you are only a wholesaler, if you're a wholesaler and then the products that you are offering or selling are less than 100,000 rands, you don't have to register for item 20 or high value goods dealer registration. So anyone who offers any goods that are less than 100,000 rands, there's no obligation for them to register. But if you offer some of the items in your business that are above 100,000, you must register. It doesn't mean that you register everything or you report to the FIC anything that's above 100,000 rands. You only report if there's a transaction that is happening in cash and the cash amount is above 50,000 rands. You only report if the suspicion, the activity or the transaction that you're entering into, or the amount or the person that you're dealing with might not be displaying the characters of what are required in that environment. Or you report if there's suspicion that a person you're dealing with is a terrorist. So that's the only time that you'll be reporting. You report a suspicion, you report if there's the amount is about the threshold of 50,000 rands, cash. Cash means paper money, traveler's checks, or coin money. So, or you report, as according to Section 31, if you deal with foreign currency and you're registered to be a person who deals with foreign currency. That's the only reason where you have to report. It doesn't mean that automatically when you register as a high value goods dealer, you must keep on reporting to the FIC. The only thing that you need to do, you must keep records, identify people that you're dealing with, train your staff to identify the type of business, the type of transaction that might be exposed to money laundering. Apart from training your staff, apply the risk-based approach. Have a risk management and compliance program in your organization. Keep records, and that's what you need to do. So I hope that it has answered the question. Thank you, Mikey.
No, perfect. Thank you. So similar to the question above, can an SME come back and register later once they start trading in amounts of 100,000 Rand or more? So ultimately, if you have happen not to have sold that TV that's worth 100,000 Rand, but you do have that stock or that item that is above 100,000 Rand, it just hasn't happened that it's been sold yet, you would still need to register because theoretically that 100,000 Rand or that high value good could be sold at any time. So I would suggest that you register as soon as possible because ultimately you wouldn't want to sell that high value good and then turn around and realize, oh, whoopsie, we should have actually registered already, and then try to conduct customer due diligence when the person has walked out the store. And as you guys have highlighted, of course, it's very difficult to conduct customer due diligence after the fact. So I would suggest if you expect that you would sell a high value good in the very near future, I would suggest that you register on GoML as soon as possible. Okay, so from Louise, just the final question from their side. After this workshop, will the final guidance notes come out end of April? That will inform how we conduct and finalize our risk assessments and decide what type of due diligence to do per risk type, customer and or product. So ultimately, it's very difficult for me to provide an exact date because it does need to go through a couple of checks and balances, but I can assure you it is certainly on our, it's one of our priorities, as the sooner that information is out there, the better. So we are working very hard to get it published as soon as possible. Okay, so Vicky, hopefully we have answered your question with regards to providing credits. Let's see. Bulk payments. Okay, I do believe, just to make doubly sure, because I see they have asked this question several times, perhaps if Spoo wants to add anything to his previous answer. I see here Vicky's question says she would like to know if they must register if they, as a jewelry low value wholesaler, gives clients terms to pay seen as credit providers, only bulk payments would exceed the 100,000 Rand plus. I do believe we did cover that previously. If it is below the 100,000, but you are providing credit and you are required to be registered with the National Credit Regulator, or it is credit in terms of the National Credit Act, then you would need to be registered as a credit provider. If you don't mind bearing with me 1 second. Okay, perfect. So Dave's client deals in precious stones and all transactions are in excess of 100,000, but only to a small group of approved customers. There are no cash transactions rather, but they're all EFT or SWIFTs. I believe, so they are a jewelry wholesaler, but I might be mistaken. Does each transaction need to be reported? And what is the time frame to report? So ultimately, you would only need to submit reports if there are cash transactions, or if they are if they fall within the suspicious and unusual transaction basket. So in terms of Section 29, you would need to conduct customer due diligence on those customers, especially where it is above 100,000. But you wouldn't need to submit every transaction to us, as it's only in terms of CTRs, cash threshold transaction reports, cash threshold reports. And the turnaround time for cash threshold reports, it has been changed to 3 days, 3 business days. Okay, with regards to the slides, yes, we mentioned that. Okay, so if the source of funds are traceable, example, credit card payment or online bank transfer, why are we still required to report on this? So hopefully we have been able to explain you wouldn't need to submit reports for credit card payments or online bank transfers, which are referred to as EFTs. You don't need to submit reports in that regard. It's only for cash threshold reports or suspicious and unusual transaction reports. Those are the only times that you would be expected to submit reports to the FIC with regards to the transaction. Okay. This transaction happened in 2022. So from patients, if the transaction happened in December 2022 and we did not collect documents, what would you do? I would suggest that you register on GoAML as soon as possible. I'm not sure, patients, if you are already registered as an accountable institution. I can't really tell from your question, but if the transaction occurred before you were declared to be an accountable institution, in other words, if the transaction occurred before the FIC Act was amended, luckily you wouldn't have to be concerned. I'm not sure if from your query when the transaction took place, but if it was before you were an accountable institution, I wouldn't worry at this stage. You wouldn't be expected to call the customer up and ask for that information because you didn't have those obligations until the FIC Act was amended to include you guys as an accountable institution. If you are a supplier to the trade, do you need to register? Ooh, that's an interesting question. So if you are a supplier to other stores that are high value goods dealers, Spoo, would you be able to provide some light on that question? So that is Michelle's query. If you are a supplier to the high value goods trade, would you still need to register? Thanks.
Thank you very much, Michael. So now, it's a question that it almost slipped my mind. Let's say, for example, now I'm a high value goods dealer, and then my client is a high value goods dealer, and then yes, we must. If the question is on reporting. Yes. You, if you're a high value goods dealer, and then you're reporting, you are selling to another high value goods dealer. Yes, I'll say yes at a high level, because now it will be based on the risk-based approach and then the analysis that you conduct on your business. So without us seeing the type of business that you are engaged in and the type of products, the type of clients and everything else, we won't be able to determine whether you have to register or not. But once you conduct that within the business yourself, and then you know that no, this is the type of business that you are entering into, and then you can discount registration after looking at the aspects that after looking at the risk aspects that are applicable to your business. That's when you determine whether you can register or not. Should it be should it happen that both entities are registered high value goods dealers? There'll be a point that, for example, any of them or some of them have to report a transaction that's in cash, which is above 50,000 rands. So that's a form of reporting. If I pay the other retailer or the other wholesaler in cash in the amount of above, which is above 50,000 rands, both parties have an obligation to report. Both parties have a duty to report, because if it happens that money goes to the bank as schedule item 6, accountable institution, they also have to report the amount they receive in cash from clients if that amount is above 50,000 rands. So if it happens now the bank receives 50,000 rands cash from you, and you are an accountable institution and you haven't reported, but maybe the other business partner that you are part of high value goods with received the amount of more than 50,000 rands and has reported. Now the question would be facing you, that you as an accountable institution, you receive this money in cash, the bank has reported it, the other party has reported it. Why haven't you reported it as an accountable institution if you are registered as an accountable institution? So that's how it is, colleagues, and then that's what it happens. But you only register if you sell products and goods or units that are above 100,000 rands as stipulated under the amended Schedule Law 1 items of the FIC Act. Thank you, Michael.
Perfect. Thank you so much. So yes, unfortunately, we have run out of time this morning, or should I rather say good afternoon. We have unfortunately run out of time with regards to this webinar. If you do have any further questions, please, or if you feel that your question wasn't quite addressed this morning, please do not hesitate to submit a compliance query to us on our website. I'll just attach the list. Or should I rather say the website. And yes, thank you very much for your time this morning. Hopefully we were able to shed some light with regards to your obligations, and I hope you all have a good day. Spoo, if you have anything further to add from your side.
Thank you very much, colleagues. Thank you very much for availing yourselves, colleagues. We are learning together on this journey, colleagues, and I hope that we were able to learn as much as we can. If you have any questions, colleagues, please don't hesitate to contact the FIC on the numbers that are showing on your screen. And then if you have any other question that maybe we could have missed, please, you can actually submit a public compliance query to the FIC, and then we'll try to respond to it as quickly as possible. So you can call us on that number. Apart from calling us on that number, you can also submit a public compliance query to the FIC. And then, colleagues, we hope that you have a great weekend. Oh, well, not great weekend. You have a great day, and then we'll see you again soon during our next sessions or other webinars. Thank you very much. Back to you, Mike.
Perfect. So yes, thank you very much. Thank you for your time today. And yes, I hope you all have a good weekend. Everybody that is taking the weekend, the long weekend, hope you all travel safely. And yes, hopefully some of your questions were addressed. Please keep an eye out on the FIC website for future webinars, as there are going to be a couple, especially for yourselves within the near future. Speaking of correction, there's going to be specifically, for example, an FIC 101 that we refer to it as, but a further introduction to the FIC Act and for other accountable institutions in terms of the recent legislative amendments. So yes, please keep an eye out on the FIC website. And as my colleague mentioned, please do not hesitate to give us a call on 012-641-6000, or you can submit a compliance query to us. And one final thing, the one that refers to documents /22-1213, HVGDs, that is the guidance that we currently have for high value goods dealers. And we are working very hard to finalize that guidance, and we'll hopefully send out the final one on our website. It will be published. So yes, thank you very much for your time today, and I hope you have a good day further. Thank you.